All right, reading the tape. How many of you guys have the ability to day trade, meaning you're not limited by the PDT rule, or you don't live in America and have to abide by those rules, or have over 25,000 in your account? Press 1, put 1 in the chat if you can actually day trade. Okay, so we got a lot. Okay, good. Okay, great, great. So reading the tape is a tool that you can use if you are a hyper trader, meaning you trade a lot. Like here, I'll post how much I traded just this one stock today, VRNA. But it's also helpful if you just want to get better entries and know what is going on with the stock. Here, let me, I'm actually going to pull this up real quick. I'm going to put this in the chat and you can see what I mean. So if you click on that, that's VRNA. Every blue section is a triangle is a buy and every red is a sell. So you can see how many times I buy and sell, right? I do it a lot. So tape reading is very, very important for me. In fact, that's most of my decisions come from that. All right, so let's get to it. What is tape reading? Tape reading came from the ticker tape machine. It quoted stocks via Morse code, and professional traders would use the tape to try to understand the overall sentiment in the market. And we use this knowledge to make educated trading decisions. Things have changed quite drastically since that initial ticker tape machine. So my ticker tape machine looks like this. I use E-Trade, so if you have E-Trade, this is what yours will look like also. This is from E-Trade Pro. So I have a setup. I have my chart. I've got 3 time and sales. I've got this one here. I've got the second one right here. And then I've got the third one over here. This level 2 captures everything in this first column. Anything bigger than 999 comes over here in the next. And then anything bigger than 4,999 comes over here in the final column. And I separate them out so I can see the bigger shares going through, because when you're playing a really fast stock, the time and sales will just fly by, and you want to take note of the bigger amount of shares going through. In E-Trade, you also need to set your configuration to trades only. Otherwise, it's going to show you bid ask, size change, and all these other things you don't really care about seeing. Now, this T on the indicator here, all that means is it's a trade. This tick, all tick means is whether it has a uptick or downtick in the price. So you'll notice this has a downtick, and it's this color because it was between the bid and the ask. But this one has an uptick, again, between the bid and the ask, right? So it depends on if the price is going up or going down, which one this tick does. And again, you have your price, your size, the time it went through, and then you have the exchange, okay? Now, you can change your coloring, you can change your size. All of it can be changed to however you want. So mine, like I previously mentioned, I like larger quantities, show size greater than 999. You can change the colors over here. So fix it however you like. Now, does anybody know what this is called? What this screen is right here we're looking at? It says it on the screen, the bottom. Yeah, it's level 2. It's called level 2, and it's also called market depth. That's right, Stacy. Now, why is it called market depth, guys? It's called market depth because you can see more than the inside bid and the inside ask. Level 1 only shows you the 2 inside bid and ask. So if you ever log into like your phone and try looking at a stock, you're only going to see the best bid and the best ask. So here, let's go through this real quick. This is exchanges. You got quite a few different exchanges where the orders are being routed. NASDAQ, BATS, EDGX, ARCA. And what I do with E-Trade is I have a depth, meaning I want to know how many total market makers are sitting here on the bid and the ask. And so what this is showing me is that there's 3. So this column up here is just summarizing what's down here. Then you have the bid price, and this is the price buyers are willing to buy the shares. Now this is your 565, there's your inside bid. And then you have these outside bids that are on the outside of it. And then on the size, it's just the amount of shares the buyer wants to buy, right? And you can try to find support and resistance points between or by seeing these bigger blocks like 5,000. And again, this just sums it up. Now over here, we've got the ask price, same thing as the bid price, except it's the ask, prices that they're willing to sell, and then the size, right? Again, this is called the inside bid, the first one, and inside ask. All right? Any questions about any of this? All right, good. Now, this is just a quick review. How many of you guys have ever heard of the term axe? Find the axe. You know, the axe. Press 1 if you've heard of the axe. Not the body spray. I guess you don't really need that anymore since we have to be 6 feet apart. But yeah, the axe in the tape, what you're looking for, it's the main player, the whale. It's people like Goldman Sachs. It's the ones that are controlling it, right? So the goal is to find out who is in control and what their goal is. If it's accumulation, you go long. If it's distribution, you go short. You guys have seen me, well, Elite Room has seen me on tape or in chat say, hey, there's a seller on tape, or there's an algo seller walking it down. And conversely, buyer on tape or major absorption. That's what I'm seeing, and that's what I'm telling you in the room. And so when you find the axe, you can actually, your confidence grows. You can take on much bigger size, and it allows you to make more money. And so what a lot of people do is also they look for certain exchanges that market makers are putting them through. And that's fine to do, but just so you know, there's a lot of ways that people can hide their routing. They can change it up, and they can make you see what they want you to see. But the most important thing is the actual trades that are going through, and that's what shows on the time and sales. All right, so that's what the axe is. Now, has anybody ever heard of spoofing? Before you read this chart, anybody ever heard of spoofing? Press 1 if you've heard of spoofing. Yeah, everybody's heard of spoofing, right? But do you guys know what it means? Yeah, Jason Fry, faking orders with no intent to fill. Yep, that's right. Now, I want you to think of this though, right? So, why are they faking the orders? So you got to dig a little bit deeper. Why are they faking it? What are they wanting to do? Lauren, icebergs are not spoofing. We'll get into icebergs. I explain that a little bit further. Bring in more buyers to trick the other side into biting. All right, so I put this whole thing up here because I think it's important to read it. So everyone knows that we can see the market depth. So they use that to their advantage, and they can make hidden orders as well. And a hidden order is one that you don't see on the tape, that you don't see on the market depth. You'll see like 500 shares, but you'll see like thousands and thousands going through at that level, but the 500 shares never moves. That's because it's a hidden order. And so when market makers want to hide their true intentions, they'll hide their true intentions and then they'll show you the spoofing. Right? So I'm going to read this. The point of placing a hidden quantity order is to be able to buy, sell as much quantity as possible before the market moves away. At the same time, why not place a very large order in the opposite direction to keep the market from moving away while you fill your hidden order? For example, you want to buy 5,000 shares at 12. So you place a hidden quantity order showing 500. So really you want to buy 5,000. All right, let's just make it 500,000. Okay, so you want to buy 500,000 shares at 12, but you're only showing 500. So that's your hidden order. But at the same time, you don't want the stock to go to 13. And so you're like, hey, I want to get this thing as close to 12 as possible. So at the same time, you place a 3,000 or 300,000 or 30,000 lot order on the ask side to induce traders to not buy. So you're trying to scare the traders into selling into your $12 hidden order, right? To not buy and instead sell into your hidden order. Once the selling stops and you have all you think you are going to get, you pull or cancel the 3,000 or 30,000, whatever size, on the ask, and sure enough, the market goes up. Why? Because you will not let it go down, because you are absorbing all the sells on the bid, and you are no longer faking out the market with the large sell order. So that is spoofing. Does that make sense, guys, how they use spoofing? So they use it to try to scare you, try to trap you short, try to scare you into selling into them. Unfortunately, yeah, it's legal. So Jason, the problem is you can't prosecute somebody on intent, right? Like, hey, I'm arresting you because in 6 months you're going to murder somebody. Well, no, that's not. You have to actually wait till it happens. And so that's the problem with this thing, is you have to prove intent, right? So that's what spoofing is. Now, if someone truly wanted to acquire the large sales like we were talking about, they're going to spoof, right? And so right here, what you would see is 600 on the size, but all of a sudden, look, you see these two bids come through. I mean, these two transactions go through. How many shares just went through at level 20 right here? How many shares approximately just went through on these two tape reads? Just add these two together, and what do you get? $3,800. That's right, Samantha, 3,800, right? But what's the size of the ask? It's 600. So why didn't that change? Why didn't that go from 4,000 down to 3,600 minus 4,000? Well, it's because it's hidden, right? So this is how you see hidden bids, and this is how you see absorption to go long, right? So they know, we know. Everybody knows we can see all this stuff. So what they do a lot of times is they'll place a large order. Well, here, let me explain this thing to you real quick. This is another tool that I use to read the tape, and these right here, the yellow, all that is it's representing big bids, big orders. So this is big asks because it's above us, right? So all these areas are big asks. So what they'll do is, hey, all of a sudden you see this huge order pop up right here, and they're trying to see if they're going to spook the market, right? They're going to be like, hey, if I put in 50,000 shares on the ask side, are people going to sell because they're afraid because they got that wall there? or are they going to keep buying? And you can see on this, you see this big green dot where my hand is, or that hand is right there? That's showing you that that order actually got filled, right? So bam, bam, big buyers. So that order did not scare away the buyers. If the market reacted negatively, you would see them pull the large orders above. But seeing the market chew through these orders is a great sign for bullishness. And it's something to keep in mind also is the liquidity chase. Oftentimes they want to push it up into these heavy areas to get more volume in and fresh buyers. All right. Now, I want to show you an example of the liquidity chase. All right, hold on. Let me read some questions. So why would it be hidden? Joshua, are you asking why would they hide their orders? They hide their orders to not give away what they're really wanting to do. So if they want to accumulate, they don't want you to know they're accumulating. So if I wanted, let's say I wanted to pick up, I don't know, 500,000 shares of AMD. Well, if I put 500,000 shares at $44, then everybody's going to start buying in front of me. That's called front running. They're going to be like, oh, there's 500,000 share order at 44. I'm going to buy at 44.01. No, it's not a recording, Chris. Yeah, I'm here. So that's why they hide it. So if I wanted to buy 500,000 shares, what I would do is I'd say, all right, I'm gonna accumulate about a couple 100,000, and then I'm gonna hide a bid, and I'm gonna place a large ask to scare everybody into selling into my bid. That's why you spoof. All right, Joshua says, I understand the bid, but would you think the sell would be out there to make people believe the spoof? So in the example that we gave, the bid is hiding. They want you to sell into them. And so if you showed the bid and you showed the ask, well, that just kind of balances it out. It doesn't show any bullish or bearish sentiment. But if you stack the orders on top, you know, like asks stacked, then it shows, hey, there's a wall to get through, and that makes people scared. All right, so the liquidity chase, market makers will often push the price through a pivot point or a mental resistance in order to get fresh buyers in. So example, this is WEME. Look at the $9 initial range breakout here. So this triggered a lot of stop buy orders that were set. Do you guys know what stop buy orders are? Do you know what that means? If I said, hey, I'm going to put a stop buy order in, what would that be telling you? So Jason, the escape hatch, that would be a trail stop. A trail stop would be, I think that's what you're talking about. Like if it all of a sudden fell and you'd get out and not be caught in the wash. So the way a lot of people play the stock market, that's correct, Stacy, is they're like, okay, if this stock gets above whatever number, in this example, 9, if this stock gets above 9, I'm going to be a buyer. So the stock will be down here in the 850 range, and they'll place an order at 905. And then it rises into 905, and bam, everybody that has buy stop orders are triggered in. There's a guy that's very famous. He runs a service. I don't want to say his name, but that's how he does it. He buys breakouts, and he does it on buy stop orders. And he'll say, hey, you know, first 1 minute candle to make a new high is going to be this, so I'm going to put a buy stop order here, right? So this is how people play it, and market makers know that. And so do you guys see the volume that came in down here? As soon as they hit this 9, what happened? Bam, all the buy stop orders, all the short covers, everybody started buying, right? So that's the liquidity that they were looking into so that they could dump more shares into the massive influx of buying. Now, you can also notice they did the same thing at 850 if you look back here. But this was kind of a weak candle afterwards, so they couldn't dump too many shares, or otherwise it's going to drive the price down, because I knew this day that they were manipulating it to make it go. Now, what you want to see is a base being put in and that absorption. Do you remember on the tape? You want to see the absorption setting a level to not let the stock go lower. So Jason, a limit order is if it's going down. So let's say the stock's at $9. You want to buy it if it's at $8.50. Well, you put in a limit order at $8.50. But if it broke above $9.15 and you were like, okay, that's resistance. If it breaks above $9.15, I want to buy it at $9.20. You would put in a buy stop order, right? Okay, so now, iceberg orders. I forgot who was talking about iceberg orders or asked the question about it earlier, but I'll go through that real quick. So iceberg orders are large single orders that have been divided into smaller limit orders. So instead of a company coming out and buying 500,000 shares of a stock, they will break it up into a bunch of smaller orders in an effort to not disrupt the price. So I don't know how many of you guys have, you know, Kyle, or what services you guys have, but what happens when somebody alerts a trade? Everybody tries rushing in, and what does it do to the price? It disrupts the price. It just goes through the roof. All of a sudden, the stock is up 10, 15, 20%, and it's like, well, shoot, I can't buy it now. Well, that's what these people are trying to avoid. So what we need to look for is what shares are actually going through, because that's all that matters. The amount of shares that actually go through on time and sales, right? So in this picture above, you can see that a lot of smaller buy orders are going off at the 2652 area. Now here, I'll explain this the way you read this. So this red line is the ask, this green line is the bid. These little dots are market orders. So they're market buying off of the ask. So you see all these little orders? Instead of buying one huge order that makes the price do this, they're just buying little bitty orders. Bam, 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 bam. Trying to catch new sellers as not to disrupt the price. All right. Now, you'll also see very few orders are actually hitting the bid. It's the same thing but reverse, right? So market sell orders are red on the green, right? So that's how you use iceberg orders, is you break them up, and you don't want to make the stock move a bunch so you can get your order filled. All right. Let's see if there's any questions. If you put limit below current price, it gets filled right away. That's right, Darwin. So if you put a limit order in below the current price, no. If you put it above the current price, you'll get filled right away. So if you put a limit order at like $9.50 and the price is at like $9, so at least on E-Trade, I put in it's a stop on quote, and here, I'll show you. All right, so I don't know if you can read down here these small letters or not. I don't know how well you guys can see that, but if I put stop on quote, all right, I'm gonna buy one share. If this gets to $13, I put in buy. So now my order, if it hits $13, I'm gonna buy it, because I think $13 is the resistance, and if it gets over, great. Now if I put in a limit order at $13, all right, now if I hit buy on that, I'm immediately going to get filled. So now I own this stock. So you see the difference? But I don't want the stock right now, so I'm going to sell it. So that's the stop, and that's the limit. So on E-Trade, it's stop on quote. All right. All right, now back to, who could tell me what the spread is? Does anybody know what spread is? Somebody type it in chat. When someone says the spread, be careful of the spread. Wow, this spread is wide. Wow, small spread, great spread. Spread is shrinking. What is the spread? Samantha got it. All right, difference between the bid and the ask. So what's the spread on this? This one right here. 10 cents, right? So another thing to pay attention to on tape is spread reduction. A lot of times you'll see, let's say, a spread of 50 cents, 19.50 on the bid, 20 on the ask. Well, bids will start climbing. You'll see a bid at 19.60, a bid at 19.75 comes in, but the 20 ask hasn't changed. It's still sitting there. Well, that's bullish, right? So every try getting in on, have you ever tried getting in on a stock and you put in an order, and as soon as you put in an order, somebody's put in one above yours, and then you're like, well, crap, I got to get higher. Well, that's the bullishness, right? So you often want to see the spread reduction. If you're bullish, you want it spreading towards the ask. If you're bearish, you want it spreading towards the bid. Does that make sense? Oh, thank you. Screen is zoomed in. I have a problem with that. I always forget to bring it back. Here we go. So if this was 1950 and this was 20, for you to be bullish, you know, you could see it go from 1950 to 1960 to 1975, and you're like, okay, there's demand, and these sellers aren't stepping down. Their 20 is as low as they're going. They're not willing to take less. So the spread is being reduced towards the ask side, bullish, and vice versa towards the bid side, bearish. All right, does that make sense? All right, so now this is a chart that I was playing. This is EQ, and this is the large time frame orders that I have. My level 2. Remember in the beginning I said if it captures more than 5,000, I want to see it. This is an example of why. So what do you guys see? What stands out to you on this tape for EQ? Jason says red. Yeah, lots of it, right? Lots of red. What else? Anything else? What price, Michael? What price sticks out to you? What price is sticking out to you on this tape? Yeah, 1074 stands out. Look, guys, this is something that you gotta get good at if you want to be a day trader. Red, right? Everybody sell. Scares everybody away. Tape's red. And while, yes, that's true, selling is bad. What you're looking for is absorption for a long. I was long this stop. Now, this 4,999 shares plus is all that is here, okay? And the smaller time frame one that I had, it was lit up like crazy too. It had 1074 red across the whole thing. Like the whole thing was just 1074 because 1,000, 1,000, 1,100, 1,500, you know, all of those were showing up on that one. Now, I want you to pay attention to the chart. Do you see this is what the chart looked like? So do you guys see this wick coming down that this arrow is pointing to? Right here. Yeah, 1075 sucked it up, right? Look at the volume right here. You guys see that volume? So, I mean, people were dumping this stuff. They were selling. Someone was selling. So that volume on that 1 minute chart was 712,000 shares went through. When was the last time on this chart that we did volume of a sell-off like this? It was over here, right? So you guys see this amount of volume? So what's the difference between the two? Look at how far down this sell-off pushed us. Okay, a 10% drop in 1 minute followed by a sell-off versus a 3% drop followed by a quick recover and rebound. Okay, why? Why? It's because we had someone soaking a lot of shares. Now, you have to ask yourself, why are they soaking? Well, the big player is soaking to push it higher so they can make money. Yeah, that's right. They wanted it to go higher. So at this point, I was like, hey, I got you, Axe. I know what you're doing, and it's time to make some money. So that's how you use tape reading, chart reading, you know, all your skills combined, and you figure out what the stock is doing. Something else I wanted to go over was just the elements of a reversal. You can see in a tape, it's absorption, right? We just went through absorption. So when you see absorption, meaning the sellers are no longer pushing the price down, right? He held that price because we found enough buyers. And this is when supply and demand meet, and eventually demand overtakes supply, and then the sellers begin to fade away. So buyers see this and see a reversal is coming, which increases the demand, pushing the price higher. All right. So you want to look for these reversals at key places that I call pivot points. And in the picture above, you can see that there is a large demand at 14. And this also matches a volume profile level, which is another indicator that I use. And so the setup of the risk reward is good, right? So remember, these dark colored lines represent a big buyer, okay? So right here, start buying in about 14, 20, all the way down to 14. Set your break, set your stop loss below this, right? Easy risk reward. And the other thing to take notice of is, if anybody has Elite, Bart has videos on this as well. You should go watch them. They're really good. They're under his tab under Elite. They're under Bart Van. But you'll see that, you see how these players play levels, right? 15, 15, 50, 14, 50. This is why these are resistances and supports. You know, once you get through them, they still come back, and they'll flop sides. They'll go back and forth. And Bart has a better video explaining at why they do this and the point of it. But just notice these levels. This is why everybody says they're mental resistances, because they actually are. People are actually putting in orders there. So I wanted to do a quick example of tape reading with Neo. Let's see. Stacy asked, what program is that? It's called Bookmap. Bookmap it lets you see things second by second. And if you're a good tape reader, I encourage you getting it. If you're not a good tape reader, you need to get good at reading the tape, or Bookmap's just going to be confusing. It's kind of like going from basic math to calculus. You need to, you know, step your way there. Bookmap is very informative. It gives you a lot of good stuff, but it can be overwhelming. So I trade with another group of traders. There's about 15 to 20 of us in a room, and we're short sellers. And this day we were looking at the daily, and it just looked like Neo was ready to top out. And we saw heavy distribution hitting the tape around 15.25. And so I thought, all right, let's get short. But we saw a huge bidder come in at 14.60. So right here. So we thought it was spoofing. Do you guys remember what spoofing is? We thought it was spoofing. How would I know if it's spoofing or if it's not spoofing? This is a few days old as well, the Neo stuff. So how do I know it's not spoofing? How would I know? Can anybody answer that? So if it's not spoofing, what would happen, Omar? Order's filled. That's right, Chris. So guess what happened to this order? It got filled. And I was like, ah, goodness. So there's a big buyer there. You know, 800K bid propping it up at 1460 and it got filled. And I'm like, ah, great. I'm going to have to fight this guy all day. Well, Neo came back up and it was setting up a perfect short. Now, can anybody tell me why this is a good short? I mean, look at the chart. It's Kyle's favorite pattern. It's the bull flag. So why am I looking at it as a good short? What makes this chart you're looking at a good short? For one, yep, top of range, and it was a tape reading, right? Remember, in 1525, I saw a lot of distribution happening between 15 and 1525 on the tape. It was setting up a double top, which makes your risk reward manageable, right? So I can start averaging in around 15 and risk off of this high of day. That's right, volume profile. There's nobody up here. So it's telling you, hey, if you get above this point, you were wrong short, you need to stop out. But I'm betting we're not. That's why I was willing to take that short, right? Now, here's what happened. You can see we didn't break high day and we did turn around. Now, another thing bid proppers do is they often let the support crack to wash out the weak hands and then they'll try to reclaim it. And they do that because it's a bullish sign. It'll break previous lows. So you can see it's trying to break this previous low and wash out everybody that had their stops right here to reclaim it, to say, hey guys, get back in. We're going to make this bullish all day. It's going to go to 20 and you're going to be a millionaire. Well, so as a short, I'm worried and excited because if they keep if this bid propper keeps coming in and keeps getting filled, I don't know how. He's got more money than I do. I know that. He's buying 800. He's already bought 1.5 million shares of Neo around the 1460 level. So maybe he's going to have it run all day. And so I'm kind of worried at that point. So it's either going to come back up above VWAP and crack this downtrend, or it's going to break to the lows. I'm betting it's going to break to the lows. Now, you can see the volume it brought in with that crack, and he was able to reclaim it. So what this leads to is he's a refresh buyer, right? I say often that there's a refresh buyer or seller on the tape. And what that means is someone he keeps refreshing. And at 1460, there was only 500 shares, and then it went down to 100, and now it's back up to 500 in a millisecond. That's what a refresh buyer or seller is. And so it's basically an algo that just keeps putting on size. And it's to make sure that it doesn't crack and it's got a certain number that it'll hit. The same thing that we looked at earlier with EQ, they kept putting on at that 74 level, they kept putting on more and more because they were a refresh buyer, okay? So you'll see that in tape a lot. It'll say 5,000, it'll go down to 4,000, 3,000, back up to 5,000, back down to 2,000, back up to 5,000. That's your refresh, okay? Now, it's the same thing that we were looking at. You do the same thing, and you could catch it on the tape by watching the size and the price that it goes through with the sizes going through, okay? Now, finally, Neo cracked, right? It went up to try to test, broke down, and I'm like, yay, okay, that refresh buyer, that bid propper, he's underwater. Great. We're going to push the low of days and possibly get down into the 12-13 region, which was our target. Well, what happened was, unfortunately, the market never makes it easy. It broke the downtrend, and I had to cover right there. So I covered still for a win, but wasn't what I wanted. So at this point, I have to reassess and redo my trade over again. And so it's like I'm still bearish on this trade. There's still a lot of people trapped, but I have to cover, right? This is an example of trade management. The trade changed. It didn't reach my profit target, but it broke above this downtrend and that refresh buyer, so I had to get out. And what happened was I had previously drawn this 1497 line. And of course, my favorite indicator is volume profile. It shows me where everybody is. This was the pre-drawn line. If it could get through them, I was wrong. It's going to be bullish. So I decided to short and said, I'm going to short up until the high of day. And if it breaks, I'm wrong. This bid proper has pushed it. And that's just the game, right? That's the game. But if you were to flip this chart upside down, it's very bullish. And all this is doing right here is retesting. So this is retesting this level. That's all they're doing here. It still hasn't proven it's bullish. Now, let me ask you a question. This pattern right here, does anybody know what this pattern is called? These three candles that is inside this circle, square, rectangle thing. Somebody tell me what this three candlesticks is called. Got a lot of head and shoulders in here. That is incorrect. It is not engulfing. Guys, you need to understand candlestick patterns, their sentiment and what they mean. It's not a, okay, dark cloud cover. Yeah, we're getting there. All right, so there's a question up here. Let me get back to it. Lindsay said, Donald, would you agree that volume profile correlates to momentum? You know, I don't know, honestly. So here's how I use volume profile. It's where people are. And it's going to stay in a certain trend. So that's your momentum, right? So that's, I'm assuming, is what you're talking about. It's going to stay in that trend until more people get above or below to break the trend, right? So in this example, they need more people down here to push it above here, right? So if that's what you mean, then yes, I agree. All right, so let's see. The answer is, there we go. It's an evening star pattern, right? That's what this is. All right, so make sure you guys understand. You don't have to know the names. It's okay if you don't know the names, but understand the sentiment. So, okay, guys, using this pattern, they're saying it's bearish. What is the trigger to confirm this pattern is bearish? Can anybody tell me? Just this pattern. That's right, Omar. So, Omar, tell me, what is the verification that this is, I should short and I should be safe in my short? What tells me that this is true? What would have to happen? This candle right here is the kicker, right? This one. So we want confirmation that this evening star pattern is going to carry through. I'm not talking about the evening star itself. It's already set its place. This evening star pattern needs to break this candle's low. I mean, the next candle needs to break it, right? And that's going to confirm, hey, it's bearish, right? So here is that same evening star pattern right here on the chart. And what happened? See, we broke that level. And you guys that know me, I don't buy breakouts or breakdowns. I buy retests. So I was already short here. And so look, as soon as it retested that spot, that's a spot to short, right? So that's how you use that candlestick pattern. So I'm back short and I'm excited, but guess who shows up? My little buddy I've been fighting with all freaking day. 600K size, same spot, same buyer. and he's making it bounce again. So now it's between VWAP and his level. We're getting closer towards the end of the day. So we're getting to 1 o'clock, lunchtime's gonna get over with. Which way is it gonna go? Well, I finally get the move I've been waiting on, and patience paid off, right? A phrase you'll hear oftentimes in the market is, money is made in the waiting, right? A lot of people, including myself, I am a hyper trader. And so when I find stocks that I want to trade, I'll trade it 50, 60, 80 times. But money is made in the waiting. You know, make your plan and wait. Now, see, this is the move that I was looking for, down in the $12 and $13 range, right? The inverse of a short squeeze is a panic sell, right? So notice the volume of the day. You see how the volume of the day up until, you know, this middle point here, before it cracked, it was going down. I wasn't really worried because we didn't have any ascending volume. The volume was not going up. And so with tape reading, with chart reading, putting them together, I could see the entire picture. And I was able to turn NEO into profit, right? So something that's hard for new traders is to go in with conviction. So you don't have to guess it right the first time. Don't buy, I mean, whatever your, let's say the total amount of shares that you'll get up to is 1,000. Don't just buy or short 1,000 shares to start with. Start with 100, you know, 200. And then work your way in once the confirmation is there. So the prop got eaten, again, obviously a good sign, right? And then you have the retest, right? And then you have the break down, and then the retest again at the 1437, and then you had these lows get broken, right? So all these are ample opportunities to add to the short position. Now, my goal was the $12 to $13 range, and you see this volume profile? I thought we may get some bounces in between all of these guys. So I was starting to cover. And this was symmetry, something that Nate Bear talks about a lot. So I covered partial on symmetry, and I covered most of it as it washed, panic sell, increased volume. This is usually a time where obviously the buyers will step up because you've taken the pain too much, you got to sell, and then you get out. And I covered my last piece back up here. Why was 12 and 13 my target on NEO? Can anybody tell me why 12 and 13 was my target? Chris, you asked, do you wait for the candle to close, or is a wick good enough? That's a great question, Chris. Two things in that. You would wait for the candle to close for confirmation. That's confirmation. I don't wait for confirmation because I can read the tape. Tape reading is probably my best skill. The chart is a lagging indicator of the tape. So I can usually tell you what's the sentiment on the tape. All right. Raja says, I got stuck in NEO. Will it go back up to 15? Raja, I can't tell you what to do, brother. But I hate seeing the words, I got stuck. There's only one way to get stuck, right? You got to have your plan. You got to follow it. You should never get stuck because you can always sell it and you can always buy it back. So I can't tell you what to do. I'm currently short NEO from this pre-market. They got downgraded. I'm short at 1260. But I don't know. I don't think Tesla should be $1,500, but it is. The market doesn't care what I think. It's going to do what it wants to do. So I can't tell you. So Ariel, how can I learn tape reading? Watch this video over and over and practice. Go onto the tape and look. Watch the tape. So guys, I've been doing this now. Kyle was my mentor. Honestly, I'm not sure of the time, 3 to 4 years, I think. And I'm kind of obsessive compulsive. I view this as a game. I have to be the best. I'm a competitor. I want to be better than Kyle. Like, that's how I view it. I'm not done until I'm better than Kyle. And Kyle keeps getting better and better. He's already up like freaking $2.5 million this year. I can't I can't compete with him, but I'm going to keep trying. And so I sit in front of the computer and I watch tape literally for hours and hours and hours. And that's how you get good at things. You just practice it. So, guys, to answer my initial question, why was 12 and 13 my target? Well, how do you guys read charts? How do I read charts, guys? You guys know this. If you've seen any of my tradings, notice the volume profile levels. I use them. You were talking about momentum earlier. I use them just to know where people are, right? So remember I said I covered a portion here? Well, this is why. Because I knew there were going to be some buyers in here because they bought here and they made money. They're going to try to buy here and make money again. If we can trap them, we're going to get an even bigger flush, which we did. Where else are we going to find another bounce? If we can break through this level, where are we going to find another bounce? Well, just look at the volume profile level. $1.16 in 2 minutes, because all these people that bought to get it, they're selling. All these people that were trapped are selling. So everybody's just like, get me out of this thing. Fire, sell, get me out. And it starts to bounce here in this other volume profile range, right? Now, you can tell, do you see the buyers starting to step up, the huge volume starting to step in here? That's actually real buying, right? Versus short covering. So this is short covering. This is, people trying to get in and out of positions, but sincere buying comes in here. All right, any questions before I jump on to just some points to remember? Oh, they don't let you see the recordings, Stacy? I apologize. Stacy, I'll tell you this, and while I'm doing these presentations, take screenshots. Take screenshots of every single PowerPoint presentation that I give, and you can watch it from your home, right? So that's a way that you can watch it. The other way is to sign up for Elite. How do you get your volume to indicate red or green? It's in TC 2000. It's just normally that way. Honestly, I don't care if it's red or green. In E-Trade, it's all purple. So I don't care. Donald, you're a beast, a real manimal. Thanks, Omar. Donald, what is the sentiment on Etsy right now? Tyler, I don't know. I haven't been watching Etsy. I can check it on when we're done. So the red or green candle on volume bar. So Karthik, I'm not sure if I'm saying your name right. Red and green is just basically if it's hitting the buy or sell. It's coming off the ask, coming off the bid. That's all it means. But just remember, for every buyer, there's a seller. And for every seller, there's a buyer. All right. Lindsay, I take lots of screenshots. I do. There you go. I'm not fast enough. Still trying. Okay. Well, just tell me. I'll go slower. I'll say, hey, Stacy, take a screenshot. And there's video software where you can record your own recording, too. I mean, I'm sure you guys can figure that out. I'm old. I'm like 40. You guys know how to do all that stuff. Out Lulu, 38%. Good job, Chris. That was my favorite chart to start the week. Yeah, some good people to follow on Twitter. A guy that I'm going to show you guys a guy. If I can find him here. Let me pull up. Yeah, that's my Twitter. I made a Twitter handle so people could follow me on Raging Bull. Anant posted it in here. But there's a guy, he's called the Short Bear. Anybody want to take a stab at how much money he made short Neo the day that I went through with you? Somebody take a guess. Whoever gets it close gets a virtual high five from the Donster. His name's the Short Bear, and let me see if I can. I'm trying to find it on my files here. Let's see. All right. Anybody see that? Can you guys see how much money he made? Yeah, right? These are the guys that I trade with. We're all pretty good traders. We all help each other out. And his name's Short Bear. You can follow him. He's a great follow. There's another guy that's real good. It's a Dilution Tracker. He's a great follow. You know, he helps you keep track of what dilution is there on a stock. So if this company has 5,000 warrants or 500,000 warrants, he'll put it up there. He'll say, hey, you know, warrants exercisable here, and he helps you keep track of it. So, but yeah, just follow me on Twitter. I post things about earnings plays and all kinds of stuff. I don't know how I can do this, but I'm trying to keep it just for the Raging Bull people. I'm not following anybody. I just want to be able to communicate with you guys, and you can ask me questions, and I can do trainings and stuff on it. The Twitter handle, I'm not even good with Twitter. I not posted it earlier in the room. Let's see if I can find it. Yeah, it's there. All right, now let's get to the points to remember. I think I got a few minutes left. So slow and steady movement upward with consistent volume indicates good buying, right? So slow and steady. Large money will often buy more shares than needed to make sure they can keep the stock in their control, how we talked about earlier, right? So this includes nasty pullbacks. Often they will accumulate and you will see a large support. And then all of a sudden it swaps and they become the resistance, and they're running you into their buy orders, and a large ask takes place. Okay, this is the whale causing the panic selling to keep the price down so they can accumulate more shares. Also, the second attempt of a break of resistance or support is more likely to fail than a third. What I mean by that is if the chart's going like this, it makes a high and it comes down and it does this. This is your double top, right? It's more often likely to fail. But what you're looking for is this trip top. Jason sent an email about Jason Bond about a stock that he was playing. He said trip tops never were. That's where this phrase comes from, because the third time it's trying to break through, it usually does. Okay. Now, a fast acceleration in price advance, almost vertical, accompanied by a large volume surge, is usually not sustained. So when you see it go parabolic, I short parabolic moves often just to get the mean correction. Like it's going to snap back and then consolidate. So it also sets up an upside down volume profile, which means there's more people trapped above you, which is a bad thing. Now, volume drying up, if you see volume start to dry up, that means they're not going to be able to push it and do what they wanted to with it. And so it makes it harder for them to manipulate, and it means a reversal could take place. Also, big volume taking place with small price movements indicate distribution and vice versa. So that's what we went over earlier. So that guy was absorbing at the 74 level, you remember? So huge volume, little price movement, somebody was absorbing. Okay? And that's how you become a master of the tape. And tape reading, guys, it is vital if you do a lot of trades. If you're a swing trader, it's not as important. You can get better fills. You can just look at the tape. But if you're a swing trader, you're swinging for days. And you know, like Nathan Bear, he doesn't care about reading the tape. I mean, he may know how, I don't know, but he's playing 78-minute charts, 195-minute charts. You know, 15 cents, 50 cents, not that big of a deal to Nate. For me, it is. All right, any questions, guys, before I wrap it up? Jacob, they are under the Elite tab on Raging Bull. if you're not a part of a lead, I don't know. I don't know what to tell you. I think Heath, okay, you do have a lead? Yeah, so go over here. Here, I'll show you. What was your name again? Let me just maximize this here. All right, so all you do, come over here. And Raging Bull Elite, do you see this right here? Just drop it down, and right here, Donald Williams. Just click on that, and that's where you'll get it, all right? All right, hope that answers your questions. Let's see, any other questions before I got a jet? Nope, I think that was it. All right, guys, I'm gonna stop the recording. My lawnmower people are here. I don't know if you can hear them in the background. I apologize if you can. Let me stop this recording.